Hello, everybody. This is Brent Foster, the Northbound Wealth Podcast. Market rallies but ends the week flat. That is the headline, and this is the week of October 7th, 2024. Stocks were essentially unchanged last week as geopolitical tensions added some volatility to an otherwise quiet trading week. The Dow Jones Industrial Average was flat at 0.09% to the positive, while the S&P 500 index ticked up 0.22% or 22 basis points. The NASDAQ was flat at 0.10%. The MSCI EAFE index, which tracks developed overseas stock markets, was a bit more unsettled by the geopolitical events, dropping 3.74%. So stocks posted mostly gains on Monday. That was of last week, encouraged by upbeat comments in a speech by Fed Chair Jerome Powell. However, the modest gains pushed the S&P 500 and Dow to fresh records. As Middle East tensions escalated in the first day of October, stocks fell, bonds yields rose, and oil prices rose as the news unfolded. On Wednesday, all three averages were flat. An ADP report showed higher than expected private sector job growth, a metric investors focus on. Oil prices continue to rise as investors watched the developments in the Middle East. Then on Friday, stocks rallied after the Labor Department's September jobs report topped expectations. And so what we've got here, Y charts on the blog. If you go to my website, www.northboundwealth.com/blog, you'll see this. Weekly market insights, major index return summary. So the Dow year to date is up 13.08%. MSCI EAFE index up 11.28%. NASDAQ is up 20.04%. S&P is up 20.76% for the year so far. All right, 10-year Treasury note is close to 4%, so it's at 3.98%. And that is up about 5.57% over the last month. So yields have gone up, and so we'll pay attention to that. I don't expect yields to continue to go up as the Fed is going to continue to lower interest rates. We'll see how the yield curve handles that and how the Fed and Treasury deal with that. So jobs out front. So the Labor Department jobs report gave investors some much welcomed insights into the job market. At its September meeting, the Fed indicated it was watching the jobs market as closely as inflation. So updates on the jobs market are now considered as important as inflation reports. The report showed employers added 254,000 jobs, about 100,000 more than economists expected. It is also showed that unemployment ticked down to 4.1% last month. That's quite an adjustment, to be honest with you, is really amazing. Key economic data that we're tracking, Fed officials are talking throughout the week. International trade in goods and services on Tuesday. Wednesday, FOMC minutes, EIA petroleum status. So we'll get an update on how oil is doing and supply, demand economics there. Fed officials continue to talk. I mean, it is ridiculous how many of them are talking. Thursday, consumer price index, weekly jobless claims, Fed balance sheet, Fed official. John Williams speaks along with Raphael Bostic, Lori Logan, Austin Goolsby, Thomas Barkin, Susan Collins, Mary Daly. It's Jay Powell. It's just like, are these guys celebrities or something? Friday, producer price index, consumer sentiment, and more Fed speak. So we'll get a lot of information this week and next over what's going to happen with interest rates. I think today, which happens to be the 9th, they announced that they were going to lower by another 50 basis points. So that's a total of 100 basis points of reductions, and that is pretty aggressive, pretty darn aggressive, 1% decline in the Fed funds rate. Let's see here. Notable companies reporting earnings. We've got Tuesday, Pepsi, Thursday, Infosys, American Noble Gas, Delta Airlines, Friday. Kicking off with the banks, right? We got JP Morgan, Wells Fargo, the Progressive Corporation, BlackRock, the Bank of New York Mellon. So we're going to kick off earnings with the banks every season. Whenever you hear the banks start to report, you'll know to pay attention. It's a new quarter and the reporting on the prior quarter. Protect your financial safety in case of a natural disaster. Speaking of which, Hurricane Milton is hitting Florida. Thoughts and prayers to everyone out there in the impacted zone cone that's hitting the middle part of Florida right now. It's a category 4 or 5 hurricane. And again, thoughts and prayers go out to you. No matter where you live, you should be aware of possible natural disasters in your area and plan accordingly by considering the following tax tips. This is your tax tip of the week. Update your emergency plan, create electronic copies of all important documents, document your valuables. Documenting ahead of time makes it easier to claim insurance and tax benefit if a natural disaster strikes. You can call the IRS at 866-562-5227 with any natural disaster related questions. The agency can provide copies of previous tax returns, order transcripts showing most line items, and more. Net personal casualty and theft losses may be deductible if attributable to a federally declared disaster. And again, this information not a substitute for individualized tax advice. Please discuss your specific tax issues with a qualified tax professional. And this tip was adapted from irs.gov. Stay tuned for the next segment. Safeguarding your identity, essential tips for financial security. So statistics show that nearly 33% of Americans have faced some identity theft attempts in their lives. And experts estimate there is a new case of identity theft every 22 seconds. As financial professionals, one of our primary goals is to help our clients create a financial strategy and protect their wealth. In today's digital age, identity theft threatens your finances, so it's crucial to understand the risks and take proactive measures. This blog post aims to equip you with the practical strategies for protecting your personal and financial information with the goal of maintaining your financial well-being. Again, this is on the podcast as well, so I am speaking with you if you're listening out there. The most common types of identity theft are credit card fraud, government documents or benefits fraud, and then loan or lease fraud. The financial hardships caused by identity theft can last for months and even years after your personal information is exposed. Depending on the type of data identity thieves obtain, the recovery process can involve several hurdles. Victims often need to dispute fraudulent activities in their credit files and work to restore their good credit. This may include cleaning up and making changes to compromised bank accounts. If an identity theft uses your Social Security number to obtain employment, you may need to work with the Social Security Administration. Similarly, if you become a victim of tax refund identity theft or an identity thief's income makes it appear that you're underreporting your income, you may need to work with the IRS. This is for informational purposes only and is not a replacement for real life advice. We encourage you to consult your tax, legal, and accounting professionals if you believe identity theft involves using your tax records. Identity theft involving sensitive, personally identifiable information like your Social Security number can have long-lasting effects. Thieves may wait months or even years to use your information. They might even sell it on the dark web, requiring you to stay vigilant indefinitely. Legal fees and other costs could add to the financial impact if your identity theft issue is complex. Some victims even need to seek government assistance during recovery, highlighting the potential magnitude of identity theft hardships. Here's some common sense protections. It can be difficult for victims to deal with identity security issues because bad actors are becoming more sophisticated all the time. You can use technology-enabled safeguards to help protect your identity and personal data, such as antivirus protection software, password managers, identity theft protection, virtual personal networks, and two-factor authentication on devices and accounts. There are also other actions that you can take to help manage the risk of becoming a victim, including don't let your mail sit in an uncollected area too long. A low-tech way criminals can steal your identity is to simply take bank or credit card statements, utility bills, healthcare or tax forms, pre-approved credit card offers out of your mailbox. So don't let your mail sit uncollected too long. Also, if you're going away, have a trusted neighbor bring in your mail or put your mail on hold with the post office. Review credit card and bank statements. By reviewing your credit card and bank statements, you may be able to spot any suspicious activity. Thieves with your credit card number or bank account information could make small purchases to see if they can get away with it. These transactions can go unnoticed. Thieves may try to make large purchases if they get away with minor ones. Freeze your credit. In some cases, you may want to consider freezing your credit file so no one can look at or request your credit report. That means nobody can open an account, apply for a loan, or get a new credit card while your credit is frozen. Remember, a credit freeze applies to you as well. To get started, contact each of the three major credit reporting agencies: TransUnion, Equifax, and Experian. In some instances, credit freezes are free and won't impact your credit score. Create different passwords for your accounts. According to the FTC, Federal Trade Commission, secure passwords are longer, more complex, and unique. Many people use the same passwords for multiple accounts, which could be problematic. You should consider creating different passwords for various accounts and avoid using information related to your identity, such as the last four digits of your social security number, your birthday, your initials, or parts of your name. The FBI and National Institute of Standards and Technology have issued guidelines stating that passwords should consist of at least 15 characters because these are more difficult for a computer program or hacker to crack. Regarding security questions, the FTC's guidelines suggest questions that only you can answer. Avoid information that could be available online, such as your zip code, city of birth, or mother's maiden name. Consider shredding documents with personal information. As stated earlier, all identity theft is high-tech. Old-fashioned dumpster diving might sound like a thing of the past, but it still happens. Consider buying a household shredder and destroying sensitive paperwork, such as credit card and bank statements, utility bills, and other documents containing personally identifiable information. Let's see, opt out of pre-screened credit card offers. Credit card companies often send pre-screened offers to open new accounts, and criminals can intercept these mailed or emailed offers and open accounts in your name. One way to help avoid a potentially identity theft issue is to opt out of receiving these offers. Clean your wallet. Here's a few suggestions. Social security number. Leave your social security card at home in a safe location. Those 9 digits can help an identity thief to obtain loans or credit card accounts in your name. A bad actor could also use your social security number with the IRS. Checks. Consider leaving checks and deposit slips at home. These items may contain more information than you think, including your name, address, bank name, routing number, and account number. Password cheat sheets. Scraps of paper with sensitive information, such as pins and passwords, can be risky. So add them to the list of what not to keep in or on your person or in your wallet. Numerous cards. It may be best to limit the number of credit cards in your wallet. The same goes for excess cash and gift cards. Bypass the PIN at the gas pump. One of the most common schemes is when criminals install a skimming device directly over the credit card slot at a gas pump. These skimmers capture and store your credit card data when you insert or swipe your card. If something looks off, don't use that pump. Also, if you use a debit card to pay for your gas, bypass the PIN if possible and use your zip code instead. That may prevent someone from stealing your PIN using a pinhole camera. Safe disposal of digital devices. Improper disposal of old digital devices is a key but often overlooked aspect of identity theft. Simply deleting files may not be enough on some digital devices, as thieves may be able to recover the data. Therefore, safe disposal is critical. Many communities have secure electronics recycling events where devices can be disposed of. However, it is important to note that different devices and storage media types may require different disposal methods. Identity theft protection services. Identity theft protection services offer a range of features designed to detect an identity theft, alert you to identity theft, and help you recover from identity theft. These services typically monitor credit reports, dark web activity, and public records for signs of fraudulent use of personal information. When suspicious activity is detected, they alert the user and provide next steps. While these services can be helpful, their effectiveness can vary. However, these services can be a valuable first step for those who lack time and or expertise to monitor their credit and personal information. What to do if your identity has been stolen? You may not know that you've even been a victim of identity theft immediately when it happens, but there are warning signs you can look for, such as bills for items you did not buy, debt collection calls for accounts you did not open, information on your credit report for accounts you did not open, denials of loan applications, mail stops coming to or is missing from your mailbox. If you're a victim of identity theft, you may want to place fraud alerts or security freezes on your credit reports. A fraud alert requires creditors to verify your identity before opening a new account, issuing an additional card, or increasing the credit limit on existing accounts based on customers' request. Here's a pro tip. When you place a fraud alert on your credit report at one of the nationwide credit reporting agencies, it must notify the others. Protecting your identity is an integral part of maintaining your overall financial health. As financial professionals, we believe safeguarding your personal information can be as crucial as making sound investment decisions. By implementing these preventative measures and staying vigilant, you can help manage the risk of becoming a victim of identity theft. Remember that your security encompasses every aspect of your financial life. If you have any concerns about identity theft or would like to discuss how it fits into your broader financial strategy, don't hesitate to contact us. We're here to help provide you with information that can help improve your personal finances. Exploring the financial impact of electric vehicles, or EVs. As financial professionals, we've noticed a trend among our clients and increasing interest in EVs. To help address some of your questions, we've compiled this high-level guide to provide insights into financial aspects of owning an electric car, including the pros and cons as well as cost considerations. While the industry has some EV enthusiasts, there are also skeptics. In 2022, according to Cox Automotive, EVs made up only 5.9% of new vehicle sales in the US. That grew to 7.6 in 2023, indicating an increasing demand for EV transportation solutions. So, what are some of the financial pros and cons? Purchase price. EVs tend to be more expensive than gas vehicles with similar features. According to data from Kelley Blue Book, the average transaction price for EVs was $56,371 in June of 2024 versus $48,644 for gas-powered vehicles. In part, the differential in price might be narrowed by incentives when buying new or used EVs. In 2024, the federal government is offering qualified buyers up to $7,500 to purchase select fully electric, plug-in hybrid, and fuel cell vehicles. Leases may also qualify for the $7,500 credit. Used electronic cars may qualify for up to $4,000 on specific models. To be eligible, you must purchase the vehicle for your own use, not for resale, and primarily use it in the US. Additionally, your modified adjusted gross income, or AGI, must not exceed certain thresholds. $300,000 for married couples filing jointly, or for a surviving spouse, $225,000 for heads of household, and $150,000 for all other tax filers. You can also use your modified AGI from either the year you take delivery of the vehicle or the year before, whichever is less. Here's a pro tip. If you are price shopping for an EV, the federal tax incentives may have already been factored into the advertised lease payments. Keep in mind that this blog and podcast is for informational purposes only and is not a replacement for real life advice. Consult your tax, legal, and accounting professionals if the tax incentives are a key consideration as you evaluate EVs. Also, tax incentives can change without notice, and there are no guarantees that the current incentive will remain in place. Maintenance costs, guys, maintenance costs. EVs can require less maintenance than gas-powered combustion engine vehicles. In a gas vehicle, manufacturers suggest that engine oil can be changed regularly, and they have guidelines for other fluids. EVs, on the other hand, have fewer fluids, which can lead to less periodic upkeep. In addition, EVs have less brake wear due to regenerative braking. Both gas powered cars and EVs are machines, so an owner's experience will be unique to their situation. However, from the highest level, EVs have fewer moving parts than cars with combustion engines. Fueling costs. One benefit of EVs is that they can be cheaper to drive. The average EV costs about 3 to 5 cents per mile at the 15 cent per kilowatt national average. A gas powered vehicle that gets around 25 miles per gallon costs around 15 cents per mile at a price of $3.50 per gallon. When all the math is calculated, it costs 3 to 4 times more to drive a gas powered car than it does to drive an electric vehicle. However, despite the costs, fueling a gas powered car is more convenient than charging an EV. The US averages about 104 gas pumps per thousand road miles compared to just 22 EV charging ports. It also takes more time to charge an EV than to pump gas into a car. Finding an open EV charging port may be challenging depending on where you live and drive. The chart that I have on our blog, you can check it out here soon when it's released, shows the number of registered EVs by state versus the number of public charging ports. The higher the value, the more difficulty an EV driver may have charging their car. For example, in Illinois, where there are almost 12 EVs per charging port, meaning drivers may have longer wait times when charging their vehicles. The number of public charging stations in the US is growing. In 2023, there were 64,187 EV charging stations across the country. That's an increase of 20% over 2022, where there were 53,492 stations. The growth of charging station infrastructure across the U.S. increased at a 43.7% compound annual growth rate from 2018 to 2023. Charging costs. Installing a home charging station for your electric vehicle is also a consideration in the overall cost of EV ownership. There are different levels of chargers, each with varying costs and installation requirements. Level 1 chargers, often included with the EV purchase, use a standard 120 volt household outlet and can charge an EV battery to 80% in about 40 to 50 hours. The equipment for level 1 chargers typically costs between $300 and $600 in addition to installation costs. Especially in older homes, that may require electrical upgrades. Level 2 chargers, which require 240 volt circuit, can charge an EV to 80% in 4 to 10 hours. These chargers usually need to be purchased separately, with equipment costs ranging from $500 to $700. Installation can be more complex and costly, often necessitating electrical system upgrades. Level 3 chargers are typically found in public charging stations and are not commonly used for residential purposes due to their high cost. The equipment alone can cost tens of thousands of dollars, not including installation costs. Beyond the initial setup, other costs can include charging pedestals, outdoor charging weatherproofing, trenching for detached garages, and multiple adapters for different EV brands. And while charging an EV at home may increase your electricity use, some EVs can act as generators to power your home during blackouts. It's also worth noting that some automakers offer installation credits with the purchase of an EV, and government programs may offset some of these costs through incentives. However, much like tax incentives when purchasing a new or used EV, charging station incentives can change without notice, and there's no guarantee that the automaker or the government programs will remain in place. So the EV impact on auto insurance premiums. Policy prices depend on a wide range of factors, including the specific model and your circumstances. Before moving forward, consult your insurance professional who may be able to provide insights into various policy choices. In conclusion, guys, as financial professionals, we recognize that while EVs offer potential savings in fuel and maintenance costs, it's crucial to weigh these benefits against the initial higher purchase price and other factors. We encourage our clients to consider their financial situations driving habits, and long-term goals when deciding whether to purchase an EV. As always, we're here to help you navigate these decisions and integrate them into your overall financial strategy. Thank you for tuning in to the Northbound Wealth Podcast. Have a great week and weekend, and we'll talk to you soon. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, and tax advice or as a solicitation to offer or buy any securities. Clients of Northbound Wealth Management may maintain positions in the securities discussed in this podcast.